Waste Management Stock, ticker symbol WM. This stock is nearly flat year to date, which is quite a difference with the S&P 500. On the 25th of July, WM presented quarter results where they missed on EPS and revenue. Analysts think they will miss on their next target as well. People love waste management stock because of multiple reasons, and one of them being the dividend. And I do understand why, with dividend yield at 1.8% and dividend growth of 8%. So with the stock being flat year to date, could this be the perfect moment to buy waste management stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. And my name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does waste management do? WM ranks as the largest integrated provider of traditional solid waste services in the United States, operating active landfills and transfer stations. The company serves residential, commercial and industrial end markets and is also a leading recycler in North America. If we dive in the most recent earnings results, we see that revenue was reported at 5.1 billion versus 5 billion last year, so almost no growth there. Income from operations increased from 890 million in 2022 to 944 million in 2023. A decent increase due to higher operating EBITDA margin. Diluted EPS was reported at $1.51 versus $1.41 last year, also a decent increase. For the full year of 2023, Waste Management lowered their revenue estimations. It is expected to be in a range of 3.25 to 4.25%, which is lower than the previous target. The core price outlook remains strong at 6.5 to 7%, and they expect collection and disposal yield to exceed 5.5%. The overall collection and disposal volume outlook is unchanged and expected to be flat. Pricing and cost optimizations effects remain on track to deliver improvements in EBITDA margin of at least 40 bps, which is very nice, a small increase versus 2022. In here we see the revenue breakdown. Commercial is by far the biggest sub-segment in terms of collection, followed by industrial and residential. Total collection is the biggest segment, representing 66% of the total revenue. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Waste Management is a 63 billion market cap company. PE ratio is at 27, which could indicate that they are overvalued right now. Later in this video I will show you my 3 price targets for Waste Management stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 20 billion and in this graph we see that revenue went down until COVID came. Revenue skyrocketed, but most recently it is slowing down, so that's something to keep your eye on. Over a longer period of time, margins are increasing, which is a good thing. EPS is following the same pattern as the margins, so nothing special to mention here. Analysts expect 2023 to be a tough year for Waste Management in terms of EPS growth. After 2023, it is expected to see double digits. For the revenue, it is a pretty similar pattern, but with slightly lower numbers. It is expected to see mid to high single digit growth in the coming years. Return on assets is sitting at 6.5%, which is a low number. Return on equity looks really good at 33%. And the most important number, return on invested capital, is sitting at 10%, which is a great number. It is slightly higher versus the 5-year average, which is also nice. Current ratio is at 0.82, which is looking pretty good. It is pretty steady over a longer period of time, which is also very nice. Right now, Waste Management has 15 billion in debt. And I prefer companies that can pay down at least a big chunk of their total debt with their total cash position. Waste Management has 144 million in total cash, so they can't pay down a big chunk of their total debt, which is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. But most recently it is going down, which is something to keep your eye on. Shares outstanding are decreasing, which is a good thing. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.78%, which is a decent number. Annual payout is at $2.8 and payout ratio is at 47%. I prefer 50% or lower, so right now they have 53% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 8%, which is not the highest number to be honest, and they increased the dividend for 3 years in a row, which is kinda nice. And if you take a look at these numbers, the dividends paid since 2012, you see that Waste Management is increasing the dividends at low to mid single digits on average. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time, payout ratio is kinda steady. Most recently it increased a little bit, but nothing that worries me. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at historical growth numbers, which is a little bit disappointing to me. But overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Waste Management stock with the overall market, in this case the S&P 500. Next to that I added two competitors, RSG and WCN. On the 5-year chart we see that Waste Management beats the S&P 500 by quite a margin. In total, WM returned 88% including dividends, versus the S&P 500 sitting at 69%. RSG had the highest return with 114%. On the 1-year chart it looks pretty different, with the S&P 500 returning 15% including dividends, versus WM returning -6% including dividends. On the 6-month chart it is a pretty similar story, with the S&P 500 having the highest return. RSG is second with 13% return. On the 1-month chart all stocks had a negative return and the S&P 500 is beating them all with a small difference. So bottom line, Waste Management beats the S&P 500 in the long run, but most recently it is lagging behind. So could this be the perfect time to buy Waste Management stock? Well, let's check the 3 price tags that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4, 5 and 6% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 11, 12 and 13%. For the free cash flow margin I'm putting in the same numbers. For the PE ratio and the price to free cash flow I'm putting in 20, 22 and 24. There is not a lot of growth left, especially if we check historical performance. But the company has a moat in my opinion. They are the market leader and have increasing margins. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now WM stock is at $157. I hit analyze and we see only red numbers. We have a low price target of $82, which is a big drop from the current stock price. We have a mid price target of $103 and we have a high price target of $127. To me, the high price target is the most justified here, indicating that this stock is still overvalued by a decent amount. My final conclusion on this stock is that I do like the business. It is a great company that pays a solid dividend. From a value point of view, things don't look that interesting, which is really holding me back right now. For now I'm skipping this stock since I feel that there are better deals out there. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.